You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanassi from OptionFit.com, and Mark the Greasy Meatball Sebastian from OptionFit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the Option Block.
All right, everybody. Welcome back to the Option Block. It's Thursday, May 16th, noon Central, 1 p.m. Eastern. It's time to get rocking with the Option Block. My name is Mark Longo from the old OptionsInsider.com. I should say the old, the new, the brand spanking new. You guys have been there recently. You see it's got a brand new coat of paint, but it's more than that. It's more than that. It goes beyond just the surface. There's a lot of fun things going on. I know a lot of you writing in, what's going on, what's happening. I've been saying for a while it's coming. It's finally here. Not winter. Let's say summer is here because it's a fun thing. We're making sure behind the scenes there's a lot of new things we're setting up there, so I'll make sure everything is working. And I know some of the ways you guys used to navigate things are a little different, so maybe we'll put together a nice little video kind of explaining all of that. But the good part is you're going to get a lot more out of the deal. So stay tuned to the site as new things come online and make sure everything. If something's not working, let us know. We'll get in there and fix it. Whenever you do these kind of overhauls, 10 things always break for every one thing you fix. So let us know if you find something. But our whole point is to make it more fun, easier, and better for you guys to use, surface the shows more, make it more responsive on mobile, make all that kind of fun stuff you guys want. We're giving it to you. So, and hopefully you like the new look. A lot of you writing in saying you like it. So thank you very much. Check it out if you haven't been there in a little bit. TheOptionsInsider.com. Remember, we're adding new navigation, stuff like that too. So if you want the articles, look for those tabs there, and you'll see options, articles, and news. That's where you get all the headlines, everything else like that. And a lot of shows front and center. We have the live, the live listening. It's going to be a part of the new iteration of the site. So check that out. Maybe some merchant functionality. We shall see. A lot of you guys have been asking us for ages if you have anything we could ever offer you guys. So maybe we'll bake some of that in as well. You never know what's coming. All sorts of new things coming. So if you haven't been there in a little bit, check it out, theoptionsinsider.com. It's the place to go. It's where all the cool kids are hanging out when they want to talk about their options. Speaking of the cool kids, we don't have any of them, but we got a good crew assembled for you anyway. I can see them all taking umbrage already. So let's get started. Let's start in the old Fidelity hot seat today. Maybe it's because I watched Game of Thrones last night and I got hot and fire on the brain. But let's go to the holding down the hot seat today. We got Trey Jarrell from the old aforementioned trading strategy desk. Trey, how you doing? How's that hot seat feeling today, sir?
It's going well, yeah. Constantine, the last emperor, was able to negotiate a nice, cool throne for us here to help cool things down. But you're a little late watching the Game of Thrones. You got to be careful with the spoilers.
I am. That's why I had to get it in. I couldn't wait
back.
a whole week. It's dangerous times if you haven't watched it because spoilers abound. I'm getting notifications on my phone from major publications like CNN and USA Today with freaking spoilers in the notification. I was like, why is my phone spoiling things for me? Stop it. So yes, people need to back off of that stuff. But yes, you can't wait even a couple of days in this environment. You have everything spoiled for you. So yes, you have to race and see it. And I know at least you're one of the guys, Trey, who doesn't really have to be jealous of Constantine for having a cool nickname because you came to us with a nickname already. So you don't need to worry about that.
Yeah, I've had Trey built in my whole life, so it's always got one ready to go.
And let's see who else is ready to go. Let's go out to the hinterlands of Maine, a.k.a. the options mecca of the U.S., where we are, just don't believe me, just ask Google Trends. And then we are joined by the man who makes it so. He is Mr. Rock Lobster himself, Andrew Giovinazzi from OptionPit.com. By way of Carmeline Capital, Mr. G, welcome back to the show. How go things in the options mecca?
The options mecca go good. I'm actually going to try to start an options club in Portland, Maine, to see if I'm actually the only person in Maine that trades options.
You're going to enjoy having your own club? You're going to buy yourself dinner? You're going to call it the Andrew Giovinazzi Club?
I guess they'll just be happy with myself club.
The G Club.
Yes, I should. I'll probably ask Fidelli because they're so huge. Like, how many Maine clients have trade options? They'll go, none.
Yes, exactly. And what's the old saying? Never want to join a club that would have you as a member. So that's a little hard when it's your own club and you're the only member. There's a lot of self-loathing involved there. So I think rather than dive into that Freudian slip hole there, let's keep on rolling. Let's see if we've got him, Mr. Uncle Mike Tusaw from St. Charles Wealth Advisors. Uncle Mike, sir, are you there?
I am here, excited for a Thursday edition of the show. Whenever Andrew says, oh, what the heck? I mean, the market could be right back up to where it was on Friday when it was on Monday, and the market's right back to where it was on Friday. So those are always fun when that happens.
There you go. And it's always fun for us when we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. And this is where, of course, we break down the markets. And the markets today are saying, trade war, schmade war. Trade war, what trade war? All is right with the world again. All of the major indices in rally-ho mode, up 1%, if not more. The Dow, kind of the laggard today, up a paltry 1%. The S&P up about 1.25%, and the NASDAQ up about 1.33%. So lots of green on the screen today. Lots of names catching a lift, pun intended there. Uber up nearly 2 handles. Lyft up over 2 handles. So both of them up about over 4% today. Tesla not feeling the love, down to 228, off 3.25. So bucking the trend to the downside. You know what else is moving to the downside? Of course, all this love, all this green on the screen means VIX cash taking a break. We're at about 15.5 right now. That's off about a handle on the day. And let's see, compared to last show, we're over 5 handles lower than where we were at this time last show. So we were north of the 20 handle. And oh my, how the worm has turned yet again. This bull, you can kind of distract him. You can maybe derail him for a couple of days, but he gets the bit in his teeth. He comes right back charging, gives you the horns, and keeps rolling. That's pretty much what we're seeing right now. A challenging one to derail yet as we keep the ball rolling. Let's go back around the horn the way we came. Let's start with Uncle Mike, sir. It's a bull day. You got to be happy. It's Uncle Mike Day. What's catching your eye today, sir?
What's not to be happy about? I think that this is a volatile market in that if you just look at the movement that we've had since May 6th, I believe it was, when a lot of the trade war news started to really hit the surface. We've been up, we've been down. We're just not to get too Frank Sinatra-like, but we've been up, we've been down, we've been paupers, we've been poets, we've been pawns, we've been kings in this market. It's been all over the place. And in looking at a lot of it, I think one of the main things that is really the mover of what's dictating a lot of this would be the VIX, and that sometimes I shouldn't say that, but the world events are dictating the markets. But a lot of what's happening is having to do with what's going on in the volatility world. With where I'm watching, one thing that I've done over the course of the last week, I've been an option buyer, I've been an option seller, I've been an option spreader. I feel that my stance on where I want to be with option trading has shifted pretty much on an hourly basis with how we've changed things so much. So I think that where volatility has gone over the amount of movement and just the largeness of the movement that we've had over the course of the last 10 days or so has been tremendous. In terms of some individual stocks, of course, Apple's down from where it was a couple weeks ago. A lot of having to do with what's going on with the world events. Of course, the financials are off their highs. A lot of things are off their highs right now, but the S&P is only off 2% of its all-time highs. So I think that's something that's very important to make note of and keep watching. But I think the main thing that I've been watching, maybe not as directly as what Andrew does, but has been the VIX, because any week where I have sold calls, then sold put spreads, then been long options again, all within 1 week, that's craziness to me. It's been a lot of fun, but you don't see this all the time.
I think that's pretty much a good synopsis for the last week or so in the market. You don't see this all the time. These multiple 1+% moves to the upside and the downside in the space of a few sessions. Not exactly normalcy. Of course, when the volatility is north of 20, you kind of need it, but we can't maintain it forever, and that's pretty much what we're seeing right now. Same question for you, the rockiest of lobsters, sir. What is lighting you up as we're not quite there yet, but we're approaching one of these days back to the zone of the monk? Kenny Loggins, a distant memory, sir.
I know the zone of the monk. We were there last fixed expiration. So that is we're coming up next week. Would be the 22nd. Will be this ordinary expiration. I like the VIX print this week was over 19 for the close. You had to blink yesterday morning to see it. 19, what was it, like 19 or something like that.
Amazing how it always captures those moments, isn't it?
It like some poor soul bought some juice at the very, very, very top. 1936. I think it was there, and it never saw that number again. So, well, where are we? We are at, we're in zone 2, which is the kind of, we're trading in the middle. It's hard for VIX to go down a whole lot more than this when we rally over almost 1.25%. So that's like a 20 vol realized move today. So you won't see anything else out of VIX, I don't think, today. Tomorrow, we don't do anything, even backtrack a little bit. Vol will probably be down a little more. Maybe you see a 14 handle tomorrow. As far as interesting stuff goes, yeah, we basically went from 15 to 20 to 15 to 20, and like Tusa said, woo, that poor guy probably didn't have a chance to go to the bathroom all this week, or last week. So he finally can take a breath and relax somewhat. And my little strategy is kind of kicking in a little bit. I did not sell enough call spreads on Monday. I was sitting there and I sold some, and I was like, yeah, I'm going to make a ton of money. And then vol just disappeared. So I still have time left on the puts to make me some money, at least 2.5 weeks. But the easy long vol delta, which I love to make money on when vol just blows up and I get to give it all back to them, it really fell apart. And I think the strangest thing, and this is for like vol watchers, I have like these vol zones, right, is because generally it takes effort for volatility to go higher, right? That means market's moving and people are buying options and paying up for those options. So we never got to zone 4. We never got to, the danger zone, which is always, you see those big moves, 2%, 2.5% moves intraday. Sometimes they're almost 3, and you can't generate a 24 VIX even for 5 minutes. So, unless the market really can kick into that extra vol gear, usually the sell-offs just don't last. And that's kind of what I'm looking for now, because I, obviously have some vol puts on the downside. And I think that's what we got. So there wasn't enough beef to this sell-off, I guess, especially unlike other ones. So it would not surprise me to see VIX in the 13 handle next week. It wouldn't surprise me at all if you just don't hear anything for a week. That's what usually has been happening, right? You have some somewhat quiet things. We're negotiating away, and then they just keep taking about a half a point out of VIX. So I did a blog on that yesterday, and if 14.5 volatility, the 30-day straddle was $95 in SPX. On the opening today, that same at-the-money straddle, but higher strike, was only $85. So, and it's actually trading a little lower now. So they're starting to take the at-the-money vol down pretty aggressively and keep it there. And that's the key. If they can keep that at-the-money vol down and it gets lower, that's crushing VIX. And that usually, because everything else in the complex starts to go down, and that is people just looking for less realized moves in the future. And that's the stuff that kind of drives vol down. So if you want an easy thing to look at the 30-day at-the-money straddle and ask yourself, if you want to sell VIX, that means you're kind of selling that straddle. It's not just the straddle, but trying to put it into sort of the easy way to picture how vol moves. That's the easiest way I can think of. So there you go. One more plug for myself. What the heck?
There you go. All sorts of plugs going on. Let's turn our attention now to what's lighting up the hinterlands over there in Fidelity. A lot of things trading today, a lot of things lighting it up. Trey, what are the Fidelity masses? What are they slinging out there in options land, sir?
Yeah, kind of some interesting stuff here today. Fidelity mixing things up a little bit from our normal rotation here. So, I wanted to bring a quick mention too on the S&P. I know we are all aware of the headlines and fundamental news, but from a chart standpoint, it was a really interesting level here. They're on this 2870. It's had a level that multiple times has proved to be a pretty significant support and resistance point right at the 50-day moving average, and just absolutely blew through it like it wasn't like it didn't even exist. So thought that was kind of interesting from an S&P standpoint here today. I was thinking there'd be a little more of a fight, but didn't show up. So we'll keep an eye on that level here again if it turns around. If not, not too far, as Mike mentioned earlier, not too far from the year highs. But for the individual names, Fidelity customers are trading. A couple not really surprises, right? You had good earnings news from Walmart and Cisco yesterday. Both of those actually popping up on the list. Cisco will be there from time to time. Walmart not so much. Interesting chart on Walmart. Had that big gap up. But kind of paused at that 104 level and started to sell off at kind of eerily similar to that last earnings report in February. Big gap up, hit this 104 level and sold off from there. So something to be kind of keeping an eye on there. The option market pretty heavy on the call side right now on Walmart. Cisco too, right? Another positive report. Big gap up. They've had a little bit more momentum here throughout the day. Sitting at those day highs, just above 56 right now, but pushing towards the year highs, right, which were just a little bit over 57 here. So Fidelity customers on the buy side there with Cisco. Same with the option market. Looks to be pretty heavy on the call side, about 106,000 calls to 46,000 puts, so about 152,000 total volume today here. But interesting on that one. Looks like kind of even between the call buyers and sellers, here right now. So kind of interesting to keep an eye on that one throughout the day. So the two that I did want to take another moment to talk about. So newcomers to our list, but actually coming in at number 2 and number 3 today, respectively, both Uber and Beyond Meat. So Uber, I think, definitely worth a mention, is their options are starting to trade for the first time. So we probably all remember the IPO, right? IPO price 45, big sell off, but starting to come back since then, about 43.30 right now. So pushing back towards that IPO price. here right now. About 43,000 contracts traded today. So it looks like a decent start here so far. Looks like the option market's heading toward the call side early. You got about 26,000 calls to 16,000 puts. Pretty heavy on the buy side here though. You got about 8,000 call buyers to 5,700 call sellers, and on the put side, about 10,000 puts to about 1,800 sold here. So, on that put buying side, looks like most of this was, one buyer as well. Someone had bought 7,500 contracts out to 2,000, the January 2021-25 puts. So, a little bit out of the money there. Interesting kind of thought on what they might be at, but making up the majority of that put volume here today. And so I mentioned the other one, Beyond Meat's another one that's been we've been getting some calls about here on the strategy desk. That's been on our top orders by Fidelity customers since it's been out. But big jump, right? So IPO'd at 25, trading at $94 here right now. Really been a back and forth stock here. I thought the really what's been drawing my interest here, just the implied volatility levels in here. So obviously expected with the moves that we're seeing, but right now, IV 30 110 on that. If we look at just tomorrow's at the money straddle, right? So we'll call it about 95. Expecting about an $8.42 move, right, over 1 day. So it might not be uncommon on some of the earnings names that we look at out there, but really no major announcements. Just kind of been the norm for this one, which has been very interesting to keep an eye out on in some of the large swings in here. But volume wise, about 60,000 contracts just about today. It's average has been about 34,000. So obviously some heavy interest in here right now, and concentrated a little bit more on the call side. It looks like call buyers are kind of leading the way, just over 10,000 contracts here. So, some people not afraid to pay some of that premium to get into Beyond. So definitely an interesting one. Lots going on here today, but that's, a few that we're drawing the interest here from our Fidelity customers.
Yeah, you mentioned the Uber finally out there live and listed. We've all seen, Lyft is kind of a bit of a surrogate for Uber. Everybody kind of waiting for Uber. By the way, the Flow Master, Mr. Schwartz, put out an interesting article kind of breaking down. I think he put it out on his LinkedIn, but you can find it other places if you're not following Henry out there. Henry Schwartz, he's a good guy to follow. He kind of broke down what we saw in Lyft to maybe give you a little bit of something to expect in Uber over the time, calls leading puts with a total ADV of about 75,000 contracts, all that sort of thing. So if you want to break all that down, comparison to Lyft, interesting, very interesting stuff here. Looking at today's paper here, what we're seeing in Uber, and you kind of broke it down, the big trade, you're right, is the 7,500 of the Jan 2021 25 puts. It's listed here as a spread, but for the life of me, I can't find the other leg, unless they did the other leg, legged it, pun intended, in very small size, because I don't see the other leg anywhere, unless that wouldn't show up as a spread, though, with a stock leg here. So, yeah, this is interesting. Long-term, far out of the money puts, buying those clearly, but what the other leg of the spread is, I do not know. But interesting stuff. That's kind of the big trade of the day here in the OOBs. A total of about 43,000 contracts on the tape out there, with calls actually leading the dance, 26,000 to 17,000 on the put side. So interesting paper, maybe not lighting it up the way Lyft did on the first day. I think Lyft did, over 75,000, maybe a couple 100,000 on that first day. Again, the day is still young, so we shall see. But maybe Uber, maybe some of the demand is spent. We shall see. Speaking of demand, let's see what's out there. You mentioned Beyond Meat's their Trey, and they're not in the top 10, but they're in the top 20 of most actives today with about 59,000 contracts on the tape. Uber doesn't even make the top 20 here, which is kind of interesting. Let's jump up to the top 10 here, where we got 2, 4, 6, 8, 10. There we go. No numbers on my chart for some reason. Number 10, Netflix there, 128,000. Number 9, Bank of America, 131,000. Number 8, good old Softy with 142,000. Number 7, Facebook, $151. Number 6, cover your ears, Uncle Mike, Cisco, $154. Number 5, NVIDIA, $166. Number 4, AMD, $174 on the tape. Number 3, Amazon, $185. Number 2, Baba, once again up there in the top 10 with 221,000. Number 1, you guessed it, the Fruit Company, 375,000. Let's see how the good old pull is is lurking today. Usually I have that quote up on my screen. I don't have it up here right now for some reason. Let's pull it up. There we go. 191.25. So kind of unched a little bit up on the day, but still well shy of that 200 level that everyone was kind of watching with great interest out there. In terms of the main indices, things are pretty active today, as you might imagine, on a big underlying day. VIX closing in at 600,000 contracts coming into showtime. ADV about 650,000 contracts. SPY 1.5 million. ADVs nearly 3 million, so over half of their ADV. SPX about 630,000 contracts on the tape. ADV about 1.3 million. The Q is about nearly 500,000 contracts on the tape. ADV about 750,000. And the Russell, aka IWM, $105 on the tape, and 225,000 is the ADV. So interesting stuff out here. We kind of have mentioned that this was rough timing for Uber in terms of launching an IPO into the teeth of all this madness. Imagine if they had launched today. The market in a much different frame of mind maybe would have been different for the view of their IPO as well. We shall see. By the way, if you're curious what the top positions are out there in Lyft, its big competitor, it's the par call still with June par calls, about 12,000 of those bad boys open out there right now. So interesting stuff. 405,000 contracts open in Lyft. Well, remains to be seen if Uber can rival them in volume the way they do in the actual ride-hailing business. Meanwhile, let's keep on rolling. Time to get weird. Time to get wonky. It is time to get into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, let's do it. Time to get weird, time to get wonky, time to get crazy, time to talk about the names you love to talk about, the names that are on the tip of your tongue. And when I'm talking about these names, I'm talking about some funky ones out here. Let's kick things off. There we go. All right, that's much better. If we actually, hold on for a second. Why is this? Let's skip to this one instead. We'll come back to this one in a minute. As instead we go out here. Let's kick things off to the names that are on the tip of your tongue. One of them is TransDigm. I'm assuming that's TransDigm Group Incorporated, ticker symbol TDG. Yes, that's right. That's the name everyone has on the tip of their tongues. Trading today, $468.63, up a whopping $16, or about 3.5%. If you're wondering, this is a commercial and military aerospace manufacturer. They make mechanical actuators and ignition systems. So there you go. And let's see. So let's look back at them over the course of the past year. Oh, it's been an interesting year for TransDigm. Let's see here. A year ago, they were trading $323. So they're well north of that. And they spiked. We're pretty much right at about the top of that. Actually, the top was $489. They hit that a couple of weeks ago back in April. So we're off that a little bit, about 20 handles off the top, but still way up there at the top of that range, well over 100 handles north of where it was a year ago. All that being said, let's see what lit up our tape here today. It was some puts. It was in particular the 400, the par puts here, going up for $3.10 right on the bid. These are pretty wide. They were $3.10 at $3.90. Going up 5,387 times right on that bid, opening over there on the Philly. Mr. Rock Lobster, this one seems like it has all of your favorites here. It's got a stock that's had a big move. It's got some juicy, dare I say it, line in the sand puts. I mean, what's not to like for you here, sir?
It has all the hallmarks of fun. How much is the government spending on military? What's the defense budget, like $1 trillion a year or something? After a while, that starts to become real money. So apparently TDG, they probably make the stuff for, like rockets. Maybe they make those rocket stuff inside the rockets. Design, research, engineered aircraft components.
They make the actuators, sir. The ignition system.
Whatever that is.
Yeah, exactly.
I thought that was like a hair care product, Actuator. Is that activator? I don't know. Anyway, this is a total line in the sand put. How could it be anything else? Almost, it's not quite 1%, but man, it's a whole lot lower than where the stock is right now. So I'm going to say El Lino in the sand put for sure, whacking it out and making the money.
Guys, like this thing's up 100 handles, but I'll take more below 400. I'll take more below 400, and I'll take $3 for the privilege of doing that for the next, not even that long. These are just out to June. So these are fairly rich for 70, close to 70 handle out of the money puts. But again, this is the name that has moved quite a bit, moved 16 handles today. So someone out here maybe taking advantage of a little bit of juice to squeeze it, which is what you like to do with juice. All right, let's also you like to drink it, but that's a side note. Let's go back to, there we go. Now that's working. Now let's go back. When you think about what's going on in the market, you want to know what's happening now. You want to know right now. So that, of course, brings us to our next name, ServiceNow, ticker symbol NOW, N-O-W. If you're wondering, this is a cloud computing company, and that's all it says, cloud computing company. So there we go. That tells you absolutely nothing about what they do, but that doesn't matter to us. Instead, let's go out and see what they've been up to on the trading side of the fence. This name trading right around $280 right now. Another one having a good day, up nearly $6 or a little over 2%. A year ago, this was trading $171, so another one with another 100-handle run over the course of the past year. Another good run for this name. Looks like it really gapped up in January, went from 187 up to 2.25. And then it gapped up again recently from 240 up to about 270. So it's had a couple of the nice gaps up in the last few months. That brings us up to where we are right now, right at pretty much almost exactly at the high, a buck off the high of its 52-week range. So let's see what our Eye of Sauron found for us here in the options market today. Interesting. Don't see this every day. Calls, it was calls, but not our usual. It's at around 280. Usually we might expect to see, 310, 330 call, something like that, some out-of-the-money call action. Nope. Deep in the money call action to the tune of the AUG 220s. So 60-odd handles in the money calls, going up 10,000 times. Very wide market on these, as you might imagine. These are not exactly the most liquid of names. It was 61.10 at 63.80. The calls went up for 62.54, and then some extra juice on the end there for apparently splits. I don't know. There's only one up and one print. So a funky print nonetheless. Let's call it 62.55. So not quite split in the uprights. We're pretty close to it. I'm going to go out on a limb. The earnings here are, July 24th after the close. So it's not an earnings name, but there will be some earnings movement captured in this one. And yeah, so interesting. This has the whiff. Mr. Rockops, you don't see people coming in for $60 calls. These very often. 62.55. That's an interesting one in and of itself. Let's look here. Let's see. Yeah, this has all the whiffs, and maybe Mr. Rockops, and maybe you agree, maybe you disagree, maybe you think they sold them, which would be an interesting choice for a covered call. But we have seen in the money covered calls in the past. I'm going to go out on a limb and say this is some stock replacement, looking to get themselves a little bit of juice on some leverage here. What's your take here, Mr. Rockops? Do you agree or do you disagree completely?
And this is a tough one right now because I'm looking at this. I am seeing they're saying it's executed through the system on the Philly. And I was trying to look for some open interest on it as well. But it's a pretty deep in the money chunk of options. And it is way opening paper too. So this is a befuddler. I'm going to guess that they're just trying to get rid of some stock and buy this after kind of a big swing up in the underlying. I mean, the stock is up. In the last 2 years, it was $100. Now it's $300. So there you go. I think somebody is maybe taking some dollars off the table. The last earnings announcement sent the stock up $40. So I think they're trying to take their dollars and ride this pretty awesome market up, and maybe just grab some dollars. And going to August, is that a very I guess they got the replacement for a little bit, but maybe they're just going to decide to go it with calls. Yeah,
it's not the usual time frame we see for stock replacements, and Maybe we could discuss that a little bit. I think we have a question about stock placements a little bit later. But not usual time frame, but interesting. And who can argue with this guy? Wanting to take putting $60 at risk versus $280 or so. It's a no-brainer on that perspective. So swap some stock for some calls. If you get the upside still, if it goes the way of the dodo, at least you got that roughly $200 or so you still got in your back pocket. Interesting stuff here. Let's round it out here with our old favorite name. We checked in this one, I think, kind of recently. I have to go pull up and see. It came across our radar because this name sounds familiar. I remember Sebastian and I having a heated debate about how to pronounce this name. But ticker symbol is QRTEA, QRTEA. Excuse me, QRTEA. And this is for, I remember calling it Qurate, but he pointed out that it probably is Qurate, one of those fun Web 2.0 names, Qurate. Let's go with Qurate. This is Qurate Retail Inc. These are their Series A shares. And trading today, about 13.5, up about 70 cents or about 5%. This is the name that's kind of had an interesting run from about 25 on the upside, which came back in November of last year, down to 11, which was, looks like not too long ago. They had a big sell-off recently on May 7th and 8th, down from 17 down, actually I should say in the 9th from almost 17 down to about right about 12 on the 10th. So big sell-off. Obviously earnings not looking too good for them. They probably hit that low there as well of 11.17. Let's see what we saw out here. This name kind of on the low end of its 52-week range. Puts lighting it up yet again. Not line in the sand though, puts doesn't look like. These are the AAPL 15, so slightly in the money puts. Going up 5,000 times for not quite $2, $1.99. Actually, these are going up above the offer. These were $1.80 at $1.95. They went up for $1.99, 5,000 times. So someone really wanted to get some QRTEA, aka Qurate, puts here. Earnings are on the 8th of August after the bell. So there's not quite an earnings play, but there are earnings. There is earnings baked into this one. $2 for AAPL 15 puts. And looks like they're buying them in a hurry. Mr. Rock Lobster, I don't know, $2 to go out to AAPL in a name that's already trading 13.5. Granted, there's some intrinsic meat on those bones there, so a lot of that is that. But still, how does this one rate on your savvy scale for hedging, sir?
So if you're looking at that put and you pay, let's say you pay $1.99 for it, right? And the stock's trading right now. The stock's trading $13.44. So what's the intrinsic value on the put? $1.56. So they're paying 43 cents over parity for that 15 call. So there you go. That's my advanced arithmetic for everybody. I'm showing off all my hot arithmetic skills. And those calls are trading like 70, 80 right now. So there's some carry there, but could possibly be a put in stock type trade. Maybe hedging their some stock because it just has gone so horribly wrong, and they're like, I can't take any more pain. I need to buy some puts. And the puts are higher. I mean, they're 210, 220. So even where the stock is right now, again, it depends where the underlying was. I'm looking at this. I think you said your opening price was $13.83, so that was more like $1 over parity. So again, I'm trying to just sort of figure that out as far as where the stock is. So I'm thinking it like as a kind of a buying some in the money puts, maybe paired with stock to try to get that cheapy upside call type trade, or maybe they already own the stock and they don't want to take any more PAIN there. They hit their limit already, so to speak.
Yeah, definitely. I like it better as puts in stock. It doesn't go up explicitly with a block tied to it. I have to dig in and see if there was one. It makes more sense that way. Just slinging it that way. So yeah, hopefully this guy did it puts and stock. Maybe he did it 1-to-1, in which case he's looking indeed at some upside here, because just outright gobbling up these puts through the offer. It also makes sense for the print, because the print they probably gave up a little bit on the option side to get a little bit on the stock side. When they're put up tied like that, you got a little bit of flexibility, which is why maybe the price on the options looks so weird on the face of it. So all of that maybe kind of lines up. So let's look at it that way. in which case I like that one a little bit better. I'll have to go back and tie this one in to see what we looked at last time to see how it fits. Meanwhile, it's time to keep on rolling. It is time to move right on into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. This is indeed the portion of the show where you guys take the reins, your questions, your comments, and we always kick things off. Let's go back to the hot seat. Trey, people are calling you guys up literally all day long, asking you questions. It's kind of in the job description over there. So what's on their mind? What are the Fidelity Options clients? What are they calling you up and asking you about these days?
Yeah, we've noticed a theme the last week or two around the risk management process here as well. But what's been a little surprising, a lot of clients, we start from the, very beginning, right, teaching the basics of exit strategy, teaching the defined risk type of option strategies to help them out. But we've been seeing a few, more sophisticated, some of our guys that have been trading for a while, get burned on, a few trades here and there. And with this market environment, right, some of these, beyond type names we talked about with these high volatility, and some of the moves in the market, not to be, completely unexpected, but what we've been telling them is just, and what I'm noticing here, just maybe thinking about this a little differently, noticing a lot of, clients really haven't, understand that things go against them, but maybe really haven't thought about what that means, just from a simple math standpoint. So, I've been encouraging clients, before you put a trade on, especially, a naked type option trade to go through the numbers, right? We talk about, hey, if things go wrong, you may have a substantial or unlimited, but what does that actually mean for you, right? If you are, bringing in a few $100 premium and, we get that big move and now you're staring at, a few $1,000 type loss, the big part of, getting to take some of that emotion out to avoid some of that shell shock is, start thinking about these things, before you put that trade on, plan it out. Know what can happen when things go wrong, and just try and be prepared for it. I think a lot of it had to do, a lot of nice trades throughout earnings season. Maybe get a little bit of that confidence build up. Maybe start to use a little bit more leverage. And fail to think of that other side. So, do what you can to remain disciplined. I think just a simple thing is do that math ahead of time. Here for yourself at your exit points and understand where your real losses are going to be.
It sounds simple. Yeah, it's a thing people forget. Oftentimes they get excited, the heat of the frenzy, things are moving, things are rocking and rolling in the marketplace. They see a juicy trade, maybe a put, they want to blast it away, they want to buy a call, something like that, and they just put it on without really doing the initial legwork of saying, where do I actually want to get out of this thing? Where would I close it if it goes against me? Where will I close it if it goes my way? These very basic things that are not unique to options, they're suitable for all styles and assets for trading, but people sometimes in the heat of the moment, we see it all the time, they forget those things, and then they put them on, and then they write to us and be like, what happened to this? And it's a fun conversation, and so avoid that conversation if at all possible. And plan it out ahead of time. Let's keep on rolling. We'll get some of your mail in. Let's hear Tim Alfred writing in. He's got some love. He says, love your show. ! Keep up the good work, Mark. Well, thank you, Tim. We love you guys, too. We love all you guys out there who listen. You guys are literally the reason that we do this. If no one was tuning in and writing in and sending in questions and listening live and downloading the podcast and all the other fun stuff, we wouldn't be here. So you guys are the reason we've been doing this now for this show for 800 episodes and the network as a whole for over 12 years. It's scary. It's crazy when you say it out loud like that it's been 12 years, but it has. So thank you to Tim and all the rest of you out there who keep the ball rolling right back at you. I love all of you. As much as you love us, we love you more. All right. Speaking of love, we got an off-topic kind of question. Let's see. Maybe I'll save this one for a slower day in the marketplace. I want to know our thoughts on Game of Thrones. We could save that maybe for another day. Let's go here. Oh, this is actually a timely one. We were just talking about this, Mr. Rock Lobster and Uncle Mike and Trey. This comes from L78er, L78ER, something along those lines. They want to know, what is your preferred delta and duration for stock replacement? Interesting question. We were just talking about what we looked like and thought was perhaps a stock replacement trade in the odd block. We said it kind of wasn't the usual setup that we usually see. And, this is kind of a your mileage may vary type of scenario. You ask 10 different traders, they're probably going to give you 10 different answers. But we've talked about it before on the show. It seems like a lot of people like to narrow down. And for myself, if I'm doing this, it's usually somewhere longer than 3 months. Usually it's somewhere 3 to 6 months of the sweet spot. Maybe let's say 6 months for the outer end of that. Probably, I'll say around 6 months. And usually probably a 60 to 75 delta. And if you go too much less than that, you're not really getting the bang for your buck that you want. You get too much more than that, you're kind of overpaying, So maybe I think that seems to be the sweet spot for the way that I like, and a lot of people like to set it up. But again, everyone's going to have their own thoughts on this. Let's go around the horn. Let's get everyone to weigh in. Let's start with Uncle Mike, sir. I'm not sure if you do a lot of stock replacement over there, but if you do, what is your preferred methodology, sir?
Yeah, I definitely like to do in the money. If we're going to go that route, maybe 70 to 80 deltas. So I guess I like to go a little bit more in the money when I'm doing it.
You just love your deltas, sir. You're a delta machine.
That's right. And so the ultimate concept with that is that I usually like to sell a little bit of premium against it too, just to offset some of the cost of it. And then after maybe a month, it's a true stock replacement along those lines. And it's something that I like with it. And I think the other important thing to mention when you are doing a stock replacement type strategy that's often overlooked in these conversations is what are you going to do with the rest of the money? Meaning, are you going, let's say that it's a $50 stock and you want to put out $7 or $8 in the call option that you buy or whatever the case may be. What are you going to do with the other $43? Are you going to just leave it in cash? Are you going to buy more options and leverage yourself a little bit? Make sure you have a plan that makes sense and is in line with your overall objectives of what you're trying to do. Because if you don't know what you're going to do with the rest of that money, it can lead to a lot of bad things really quickly. So I think a very important part of the plan for stock replacement is to have a plan of what to do with the money that you're replacing.
I think that's a good point, too, about, he doesn't ask about that, but most of the stock replacement that I and a lot of people like to do does have that short premium component to it as well, usually longer term call somewhere in the 6 month range, and maybe longer if you like it, but somewhere in that range, and then selling usually narrow term calls against it monthly, maybe weekly if you really want to manage it a bit. There's different names for it. Some people call it a synthetic covered call, and that really isn't accurate. Our buddy Brian over there on the Playbook Show calls it a fig leaf because you're kind of covered. So there's different names for that strategy, but if you're going to do these, definitely consider having that short premium angle on the the nearer portion of the curve. I'm making up names here, or making up words. And that'll certainly offset whatever deltas you're buying there. That'll make it a little bit more palatable for you. Trey, same question for you. People must call you up with this kind of question all the time. How should I set up my stock replacement? What is your go-to methodology, sir?
Yeah, I'd say pretty much in line with what you guys are looking out for standard stock replacement, right? Generally looking at longer term, have to get deep enough in the money where it, still makes sense delta-wise here. But not going, all the way to one, right? We still want it to behave like an option, here, obviously. I'd always do like to take a step back with clients just to really ask what their ultimate goal is here. When this comes up, a lot of times we see that client that may have a large gain, wants to take some risk off the table here as well. So always like to ask them as well. What are your thoughts on the stock going forward? Do you really still have that strong bullish outlook? Is it really the right time for a stock replacement? A lot of times I find that they just think that maybe the move is ended. May trade sideways or come back down. Maybe it's an opportunity to actually get out of the stock and hold a little bit before putting on the option strategy. Or, right, if it turns out that they, maybe are kind of that extremely, bullish, maybe try and take advantage of, a little bit more of the leveraging factor of options, right? Maybe not necessarily replacing for stock replacement, but, maybe looking for something closer to at or out of the money to take maybe a lot more of that capital off the table. So, when those questions come up, always like to take a step back to see what the original outlook is. But, for the true stock replacement, right, that kind of 60-80 delta range, looking further out, going to give you that kind of normal sweet spot.
Mr. Rock Lobster, and last but not least, how do you like to structure your stock replacement, sir?
So a couple things. I like the stock replacement as kind of your stock starter kit. I like a lot of buying, I like buying stocks that were once kind of high flyers and all of a sudden they kind of fall out of grace. Everybody hates them for a while. So I figured, if they're up there once, maybe they get back there again. So instead of spending all the money on stock, you buy 1, 2, 3 contracts or something like that for leaps. So, and I would just, for number one, is just the, never buy the stock kit replacement. So you spend a fraction of the money and you see if the stock can get off the mattress or the basement floor. And that's usually like a 1 year type of thing because it takes a while for anything to really turn around. And the second one is I bought the stock, I was too early, and, let's say you buy the stock, it's kind of down, and you're like, oh man, this is not going very well. You're kind of at what I would say, let's say you're down to 15%. And you just get rid of your stock and you replace it with a call. And at least that way you've reduced the risk in the stock. Even though you still believe in it, maybe you think the market's just lost its mind and the stock pulls back a bunch. You're like, okay, I'm going to sell my stock, but I'm going to spend some money and buy twice the delta. So you reduce your dollar risk by spending less money, but you just buy a couple of calls that are in the money. And that way you take just dollars out of that position, but you give yourself twice the delta and you see what happens. So you want to use them where, to me, anytime you buy calls, you want bounce, you want upside, you want things to fly. And that to me is that's the reason. So you either need it to happen really quick or you need time to just, okay, the stock's going up, So as situations where you have a potential bounce, where you want to change the leverage, get rid of your stock and leverage and buy some stock, like a 70 delta call. You don't want to buy too much juice, but again, if you do get that bounce, you're back into a nice spot and you're making a lot more money than you would have with your stock. I think that's kind of the ideal for me, for stock replacement on stuff like that. So
it's kind of similar to what we just saw our friend do. Obviously, we don't know the ratio of what he did the calls to the stock, if he did indeed swap some stock out, but it seems like he did that. In which case, taking some profits off the table and putting some calls back to work. You get the upside, but if the downside happens, you're not exactly exposed. So an interesting strategy, a lot of different ways, a lot of different use cases for it. Hope we broke some down for you there. What was the L78er? And keep those questions coming. Meanwhile, to keep on rolling into our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. Let's do it. Let's go around the block. There are still, if you're tired of macro, there is some micro to focus on today. Pinterest. First big official report since going public. So that'll be interesting. Ticker symbol, of course, pins out there. Let's see how our friend Pins is looking right now. Just shy of 30. 29.93, up about $1.30 or about 4.5%. So a good day for Pins. Feeling the love. We also have, that's after the bell, also two other big names popping off today. NVDA, which a lot of people have looked at for a while as a bit of a surrogate for crypto demand. We've seen that kind of fall off a little bit because the mining wasn't exactly the hot, sexy thing it once was. Now with Bitcoin threatening the 8,000 level floating around there, mining becomes a lot more interesting. So maybe NVIDIA becomes more of a bellwether for that space again. They're at about 159, almost 160, up kind of slightly on the day. And then AMAT, a name that's been lighting up the volume charts of late, 41, almost 42, up about 40 cents today. They're also after the bell today. So a lot to keep an eye on. Let's go back around the horn the way we just went. Let's start with backwards. Let's start with the Rock Lobster. Sir, what are you watching for the rest of this week?
I'm watching to see if we could just break the 2,900 level and sort of stay there. I think we're just going to do a little more back and forth since we've kind of made the trade war is in a disaster rally, but there's no new news yet. So it's like how far we can go. And we'll see how low VIX can go. I mean, it almost printed through 15 today. So I think the market just probably pulls back a little bit and does nothing for a day or two while it digests all the noise. But I think that's where we are. That's what I'm looking for, to see if it just hang around that level.
Just hanging around. Trey, are you just hanging around? What are you watching for the rest of this week into the weekend?
Yeah, so the orders by Fidelity customers here. Did see NVDA pop up here as the 11th here for the day, so they got some interest. Will be an interesting name, as you mentioned. Had a rough go of it here. Market's looking for about a $12 expected move. Be interesting to see how that one plays out, if they can get some traction and turn things around, or continue near those year lows, not too far away from those right now. Also noticed Baidu after hours here today, so another kind of ugly chart to say the least on it here. Been in this pretty significant downtrend, just off of the year lows here right now. Expecting moves around $7 or so. So that'll be one to keep an eye on, see if they can turn things around, or if it's a further downward move here for them.
And last but not least, Mr. Uncle Mike, sir, what are you watching for the rest of this week into the weekend?
Well, seeing if we can get a new all-time high could happen tomorrow at the rate with which the market's been going this week. So we'll see what happens there. Macro stuff, of course, as always, on seeing if we can continue to move like we have, or maybe we'll go back down again. We'll see.
We will see what is going on for the rest of this week, listeners. But unfortunately, we'll have to leave it there when it comes to this episode of the Old Option Block. There's my music. All right. But before we go, let's go back around the horn really quickly. Let's start with Uncle Mike. Sir, if people want to reach out to you, maybe they want to do some call roll and some put roll, maybe they want to do some stock substitution, where should they go? What should they do?
stcharleswealth.com. Find more information about how to get a hold of me. I have a lot of exciting things going on. Within the next month, we will have another St. Charles Investment Club meeting. So if you are in the area, make sure you stop on by. stcharleswealth.com.
stcharleswealth.com. And Mr. Rock Lobster, if you're done falling off your chair there, if people want to check out your big event coming up, where should they go? What should they do?
I'm not the one making the noise. Hey, our big event, June 4th through the 7th, I believe. Go to Chicago, eat steak on Sebastian, have a good time, watch the Cubs, meet Mark Longo, meet myself, and learn more about options in 2 or 3 days than you will in your entire lifetime. I guarantee it. There you go. That's my guarantee.
All right, and last but not least, Trey, if people are intrigued by all this Fidelity options talk, they want to learn more, maybe they want to call up the strategy desk and talk to a pro like yourself, where should they go? What should they do?
Yeah, very easy. Head to fidelity.com/options. I got a ton of great information about our trading platform and our team. If you're already a Fidelity customer, feel free to give Fidelity a call, 877-907-4429. Feel free to ask for me or the strategy desk. We'd love to help you out, tell you about some of the other things we do here with our classroom sessions, or have a quick conversation with you.
Check it out, fidelity.com/options, and make it really easy to find. Kick the tires and light the fires, and then let them know, hey, we sent you. They like to hear that kind of stuff. And on behalf of the Rock Lobster and Uncle Mike and Trey, and indeed myself, I want to thank all of you out there for downloading, streaming, and subscribing. All the fun stuff that you do, keep them coming. If you're listening live, just hang out. We'll be back. We'll play some fun stuff in the interim. We'll be back in about 30 minutes to talk some futures options, so that should be fun. All sorts of stuff lighting up on that side of the tape, so stay tuned for that. Otherwise, if you listen on the podcast, we'll see you back here next time for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.